Good morning or good afternoon by the time this actually ends up on YouTube. I felt the need to make a video because yesterday morning I watched Trey's interview with Jordan Belfort. And then I spent a lot of time going through Reddit posts and YouTube comments and Discord discussions. And I feel that what I was getting from everybody else is not the perspective that I have. There was a lot of talk of FUD, some people even kind of slamming Trey, and I feel like that's kind of messed up. And I wanted to throw this together just to give some different perspective in hopes that it may make other people that are feeling that way more secure and bring the Gorilla Gang together again, I guess. But anyway, so I'm going to throw some snippets together from Trey's video, explain each one as to why I feel like it's not FUD, and then from there, hopefully change the mind of my one YouTube subscriber.
Because there's actually been a lot of FUD kind of going around with dilution with both AMC and GameStop. So the AMC CEO, Adam Aron, has been talking about this shareholder vote for passing 500 million shares to dilute. I personally voted no for that because in the short term, it dilutes supply and demand. Like you mentioned, you increase the supply in the short term, the price is going to cut in half into a third or whatever it is. What do you think about that situation? And do you think it's pretty likely that passes? What kind of, advice
would you give? It'll pass. It'll pass. It has to pass. And why wouldn't it? It would be ridiculous for it not to pass. In other words, I mean, for you to vote no, I understand, like, it's not like a rational decision to vote no. In other words, the stock is wildly overvalued. It just is. I mean, there's just there's no possible scenario which either GameStop or AMC is fairly valued. This price, they're wildly overvalued. Right. So it would make sense. The reason I knew this was going to happen is because how could it not happen? Like, the management has a fiduciary to you as a shareholder. It's a responsibility to you to take advantage of an inflated price. If people are going to buy it, or it's at 10 times the price it should be trading at, fundamentally, then it behooves the management to raise money because it's not that dilutive. To raise that much at that high a price, you're not diluting people out that much. It's one thing if the stock was $8 a share and they sold 1 billion shares, that would dilute everyone out. But it's anti-dilutive at this level because it's not worth this much money. You're raising, whoever buys the stock, in my mind, is kind of nutty. It doesn't make sense. Listen, the whole thing right now, it doesn't really make sense in terms of it's just not trading at a fundamentally, justified price. That doesn't mean you can't make a lot of money trading it at these high prices, whatever. Right. But I just don't see how you justify it. It's just trading here. You're just betting that some guy is going to take a company and make it worth infinitely more money in the future. But it's not a really good bet as versus a company's already on the way there. I don't know. I mean, it doesn't really make much sense to me, but.
Sure, yeah, I see what you're saying. I mean, and fundamentally speaking, AMC and GameStop both are 100% overvalued. I mean, GameStop trading at $200, $300, all the way up to $500 doesn't make sense, and it goes against all logic, like we've been saying. I think what it comes down to is just kind of like the cult following that they kind of have. I mean, people are just buying it because people are buying it, But I'm totally with you. In the long term, it's going to be good for the company in the sense that it will raise cash. It'll help AMC get out of debt. That's a whole sort of situation.
The problem is that I think people don't understand the difference between Bitcoin and GameStop and AMC. Like, people have gotten this really strange, they're in this false sense of security right now that we'll just hold it and it'll come back. Because they watched it happen with Bitcoin and it did come back, but Bitcoin is not a stock. Bitcoin cannot issue shares whenever they want.
Right.
There's very, very finite supply of Bitcoin, which is what gives it its value, so to speak. And I'm a bull on Bitcoin right now because I think that the technicals are going to bring it higher. But that does not exist with GameStop. This is exactly what will keep happening. If the longer the stock stays up at an inflated value, the more shares they will dump on the market until it goes back down to and just mark my words, it'll keep happening again. They'll keep adding more and more and more shares onto the market because why wouldn't they?
Right.
It just doesn't make any sense. It's it's essentially increasing the book. It doesn't make any. You understand what I'm saying? Like it's helpful to the company to raise money at this point. They should, so they'd be crazy not to.
Yeah, they were both.
So before anybody jumps on me, I will say right off the bat, I disagree with JB's statement in the stocks being overvalued. Particularly with AMC, we know they're both heavily shorted, but we know AMC is heavily shorted. We know the pandemic drop in earnings happened. That was completely expected. We know that attendance is turning around, which is going to be fantastic. I'm not sure if JB was focusing more on GameStop in this video. It came off that way to me, to be quite honest, with a lot of the things he said. And I'm not sure if that's because the SEC is always watching him. We know that he has a huge history within the financial world, and that the SEC is always watching. He kind of has to watch his back. He can't say too much. I know a lot of people, particularly maybe new retail investors, were really pumped about his AMC tweets and the fact that he was going on Trey's show. Maybe they had expectations that were very high in terms of him going on the show, pounding on his chest, saying bye AMC, but that was just not a realistic thing that was going to happen without him being in major trouble. So I am not surprised at all. That being said, it could have also been a publicity stunt. Let's be honest. We know he has a history of, Anyway, we won't go there. We need to remember also that apes are holding roughly 80% of the shares currently, based off of a lot of the DD that I've been reading, particularly on Reddit. We know that the shareholder vote is happening in order to add the discussed shares. Whether or not this passes is based on how we vote. We hold 80%. Always remember that. That being said, we don't know how this is going to go because there are a lot of people disagreeing on what should happen here. I don't think that this is a surefire dilution, contrary to what JB did say. I also don't necessarily believe that if it passes, that it will be immediately diluted. For all we know, AMC could be asking for these shares to release them post-squeeze for extra liquidity and future growth. And it definitely makes sense for them to dilute at some point. I just feel that it would be counterproductive for him to do it right now and, to be frank, piss off the majority of their shareholders. There's been plenty of times in the media that we've seen Adam backing the movement, so I just can't see him turning around and disrupting the support right now. It doesn't make sense, especially after his tweet yesterday, basically saying that he wants to potentially do an interview with Trey. Is that what we're all hoping for? So that's very exciting.
What do you see happening over the next 6 months to a year? Do you think there's people that are going to walk out the other end of this getting pretty burned? Do you think that there's actually potential with all this stuff going on? Like, people are pretty well expecting a second squeeze like we saw the first time. And I'd be curious to know if you think there's a chance of that happening again.
I don't think that happens again. I think I predicted the second squeeze. I predicted when it fell back down, I said it was going to happen. I was exactly right. The stock really got clobbered. I said, everyone's like, it's over. So I said, no, it's not over. Although it was really not less of a short squeeze, more of like a gamma squeeze with options, like people buying the options. Then people who issue the options want to make them, they issue in calls. They want to make them covered calls. So they buy the underlying stock to reduce their exposure. So that drives up the underlying stock, right? That's what drives it up. If people buy enough options, it'll drive up the price of the stock. And someone's got to sell them the options. The people that sell the options don't want unlimited exposure. So they go buy the stock and create a spread, and they get it's called a covered call, right? That's who writes the institutions write these instruments. And typically the people that make money in options are the ones that write options, not the ones that buy options. That's an old law on Wall Street. Listen.
So we have to remember that in Trey's question, he asked JB what he expects to happen from 6 months to 1 year from now. So I feel that the answer is based on that timeline and does not create FUD for our current situation. I don't believe that it's expected to take that long, at least I hope not. But note that he does mention that those buying options are not making as much as those writing them. So really buying the stock, especially at ask, is paramount, in my opinion.
It's telling you when a bear market hits, all of this stuff goes out the window. There is no more stocks that we like and story stocks. The stocks that don't have fundamental, they go to freaking zero. Like they go down, like they go drop like faster than you could ever imagine. Everything does. A rising tide lifts all ships, and a falling tide sinks all ships. Now, what you end up having in really bad bear markets, and it will come, and it's coming. It's going to come, maybe tomorrow, maybe in 3 years, but it's coming.
So from this, I try to remember that JB's experience within the financial sector was from when there was only bears and bulls, and now we have apes. So things are a little bit different, and I feel like the traditional market doesn't 100% apply anymore. It could be totally different now. And I know he's warning of an impending market correction, which we all know is going to happen. It's a totally valid concern to have that we need to be ready for. And he also notes that there's a lot of money to be made in the market currently. And also lots of room for losses. Any market, you can have losses. A super bullish market, you can still have tons of losses. So, I mean, that's always got to be considered, I feel like. And I don't feel that that was a negative statement to say at all. It's something we should all always be on the lookout for because we know that the market is going to cycle. I'm personally also very bullish on crypto, and I think it's a good investment, especially if the stock market is going to go down. I feel like potentially that may be very good for crypto. All I feel though is that JB is saying to take your tendies while you can, and there's nothing wrong with that. And for those of you that are smooth-brained, the stock market tree is growing an unnatural amount of bananas right now. So the whole idea is to take your bananas out of that tree before it gets cut down and your bananas get squished. So then you can take your bananas to, you know, a crypto tree or a metal tree and have them there. And then you can hang out on the other tree again once the tree falls, and you can wait for some more bananas to grow. I just feel multiple income streams, diversified portfolio is the way. Do your DD, and this is not financial advice.
Kind of foolish because it's really hard to beat the market. It just really is. Like, no offense to anyone, it's a very difficult thing. You know what I'm saying? Like Warren Buffett, if he makes 12%, he's a genius, the guy, in the real world. So it's like these ideas of making these extraordinary returns, they don't exist in the real world. We're all being part of this incredible combination of a bull market that's fed by the government dumping massive amounts of capital into the economy and banks lending absurd amounts of money. It's all the same thing that happened in 1999, 2007. It's the same cycle repeating itself again that never really fully cleansed out of the system. I'm not a doom and gloom guy. I'm not saying it's happening tomorrow.
Right. No, I totally
like, this
get
could go on. It could go on for 3 to 5 more years. I don't know. And I think everyone should make as much money as they fucking can until that point. What I'm saying is be careful.
Apes together are strong, and we cannot forget that. Warren Buffett says, be fearful when others are greedy and greedy when others are fearful. I know it's totally used all the time, but it's a very valid quote, and we should remember it always. Also, BlackRock is the current White House financial advisor, so they do have a vested interest in a potential squeeze. And stimulus checks were also very timely, I thought. We would win, government wins, AMC wins, and the only loser here is the shorts, really.
Suddenly, I remember 1999, I had a lot of friends that they became day traders. It was just exactly as it is today, my friend. Exactly. Everybody and their grandma was a day trader. It was all the rage. And in a period of like 3 to 6 months, everyone got wiped out. Wiped out. People that had great careers and as mortgage brokers and this, they left it to become day traders. They got destroyed because what you don't realize is this stuff, none of these strategies work in a down market. They only work in up markets. So that's the danger. So in the meantime, I think what the smart thing to do is to like make as much as you can right now. Right.
Well,
and play these momentum, right? But make as much as you can.
Exactly.
But just be aware, and you brought up a very good point in the beginning, which is educate yourself so you know both sides of this, so you can see it coming, and at least take some chips off the table.
Right.
So JB mentioned here that many people he knows that became day traders were wiped out in 3 to 6 months because of a bear market switch. And currently we're in a bull run, but we know the bear market is coming. And basically, he said we need to be careful and plan our investments accordingly, which I completely agree with. And I just feel, learn as much as you can, ensure that you're as well protected as possible, And this also leads back to the points about crypto and having a diversified portfolio.
That's why I wanted to bring you on, because I'm not trying to BS anybody. I want to get the unedited, the no filter, straight truth on what you think is going on, because that's what matters the most to me is education. That's what my channel is built on, is just seeing what I see and, bringing that to the public so we can, get the word out there and just try and tell people what's up.
So Trey makes it very clear that he wants to educate and he wants to get different perspectives on his channel. The reason why this movement has been so strong is because there are people, many people like him, that spend tons of time putting research together and sharing their DD and sharing their opinions and getting different perspectives. And it's been super invaluable to get to where we're at now. And I mean, there's been huge amounts of FUD and media spin. And I mean, as long as we use discernment, I think it will serve us super well. It's served us very well so far. Remember that the attendees are not the only thing that's positive here. Not only have we come together to save companies that we believe in and that we have nostalgic memories for, but a lot of us are invested because we remember 2008. And the corruption that destroyed us or our families or our businesses. And I feel the DTCC filing that just came out means that we are not going unnoticed. And it is a very positive sign that should propel us forward. And I know for me personally, it's not only strengthened my resolve, but it is really enforcing that I hold the line. I stand with Trey. I appreciate all the work that he puts in, and the fact that he put in a personal investment to bring JB onto his channel to share that information with us really shows that, education is important to him and he wants us to be in the know. And for anybody to even insinuate any little bit of FUD from Trey, to me, is just insanity.
Something that I was reading on some news articles is talking about a supplemental leveraging ratio, which I think ended on March 31st. So this is the idea, I think, that banks are able to lend out more capital to big institutional buyers who could have potentially been over leveraged. And after that expired, I remember seeing in the news that some of these hedge funds got liquidated. I think Discovery and Viacom both took some pretty nasty hits. And that seems like it could have been a precursor for this bear market that you're talking about. Do you think that's something with merit to it? Do you think that could be like the black swan, where you see some big hedge funds that do get liquidated because maybe they are over leveraged, or there's banks that are sending out liquidity? Am I way off the ball here? Let me know what you think.
I don't think so. I don't think that. I think it's something going to be much different than that. I don't see those type of things really making an impact. You have to understand something. There's a very vested interest that the government has right now in keeping things going. Right. They keep kicking the can down the road and kicking the can down the road and kicking the can down the road. Our deficit is 20 plus trillion dollars. The interest on that deficit would be crushing if interest rates ever went up. They can't let interest rates go up because they can't service the debt. If the interest rates go up, there's no way to service the debt. So they're almost like locked in right now. They have to keep interest rates low. The problem is going to happen when if something happens and inflation takes off. That's going to be a disaster of like biblical proportions.
In USA Today Money, they released an article, May 13th, 2020, and I quote, "An unstated practical result of the Fed's bond purchases is that it creates money to finance the gigantic debt run-up by Congress. The very idea of it tends to explode the heads of those who say dollars should come from work, savings, and investments instead of thin air. In the age of nearly $25 trillion of national debt, such sound money concepts seem outdated, relics of a bygone era in which the value of a dollar once was based on a fixed amount of gold. What we're working with now is fake money, a fake measuring rod." Longtime Federal Reserve critic and former Republican presidential candidate Ron Paul told USA Today. It is unbelievable. And then we have CoinDesk on September 14th, 2020. They reported $1.4 billion every hour. According to Bank of America, that's the pace at which the central banks around the world have been buying assets since the coronavirus-related lockdown started in March. Coincidentally or not, the market value of the NASDAQ 100 gauge of tech stocks has climbed at roughly the same pace since then. For much of the past 10 years, Wall Street has proved too big to fail, and monetary policy markets have implicitly supported asset prices to boost economic growth. Bank of America chief investment strategist Michael Hartnett wrote earlier this month in a report. In 2020, the policy is more explicitly engineering an overshoot in asset prices. That's the backdrop of the Federal Reserve's two-day closed-door meeting this week, where top U.S. officials will evaluate what is perhaps the loosest monetary policy stance in the central bank's 107-year history. Interest rates have already been cut close to zero, and the Federal Reserve is buying $80 billion of U.S. treasuries a month to keep the markets afloat, with trillions of dollars more available through emergency lending programs. The Fed isn't expected to announce any major changes other than perhaps formalizing a plan that Chair Jerome Powell laid out last month, under which inflation would be allowed to rise above the 2% annual target without triggering immediate rate hikes. The central bank's balance sheet already has expanded this year by about $3 trillion to $7.1 trillion as of last week. In an article released on April 7th, 2021 from CNN Politics, they reported Americans are saving much of their stimulus checks or using them to pay down debt rather than spending the money, according to a new survey from the New York Federal Reserve. On average, households are using or intending to use 34% to pay down debt and saving 42% of the stimulus payments they received from the most recent COVID relief bill, which passed in March, which are worth up to $1,400 per person. Only about 25% of the checks are going to spending, according to the survey. While I do realize that a couple of the articles I used are a little older, they're from last year, it definitely drives the point home about the current spending situation of the Federal Reserve and the possibility for an inflation catastrophe. In my opinion, it's clear that a financial bubble is in play, and the available data, in my opinion, shows how valid JB's statements are. And I think making sure to get educated about the financial and investment markets in order to keep yourself out of the line of fire and to protect yourself as much as possible are very important.
I just bought a new car for my fiance, right? I got her beautiful Aston Martin, the truck, new one, right? $220,000, right? And I went into the dealership and we looked at that, looked at a few of the cars, and I was going to just buy her a car. You know, she wanted a car, right? And I was going to buy her a car. And I was going to pay for the car, like give them the money. And then the guy says to me, "Don't do that. Just you have good credit. Your credit's perfect. Just we'll give you the car. Just pay us $2,600 a month." And I'm like, "Fuck!" I'm like, "All right, well, I might as well hold my money. I mean, I'll write off the $2,600. I mean, like, so I got this brand new, beautiful $250,000 car almost for what I paid for dinner in one night. All right, now." Think about that. And what shocked my fiance, she's from Argentina. She's like, "I don't understand how that's happens. Like, we can't do that in our country. You have to buy the car and earn the money. People don't have that." I have friends that are buying houses right now that are $10 million houses, and they'll put down $2 million and borrow $8 million on an interest-only loan at 3%, and they're paying $20,000 a month to live in an $8 million house. A $10 million house.
That's insane.
That's not normal. Yeah. Like these, you understand? Like right. there's an inflationary, there's something going on right now where money is just so easy to get right now. And you're seeing it prop up, especially in the ultra high end of the real estate market, where prices are just skyrocketing because money is so cheap.
I know there are a lot of apes out there that are discussing the possibility that Aston Martin truck or Aston Martin car is being used as code for buying AMC. And while I would love for that to be the case, because I am a huge fan of a good conspiracy theory, I'm not even going to touch on it because it's speculative. It's an interesting theory, but it's available on Reddit, so I'm not going to talk about it. But that being said, what I do see as important here is the point that it is becoming easier and easier for us to get credit, and it's easier and easier for us to get overextended. So this is a large part of what happened back pre-2008. There were people buying houses they couldn't afford. There were people driving cars they couldn't afford. There were people with credit cards they couldn't afford, and just completely overextended. And I feel like that is a pretty good representation of what's going on right now. So people are buying things that they cannot afford. And I feel a good rule of thumb, if you're new to, paying more attention to your finances, is that if you can't afford it outright, you can't afford it, period. Don't go financing little things like phones and whatever. Not financial advice, but it's a bad idea. Financing is great for when you need to buy a house, because realistically right now with this market, there's no way you're buying a house cash unless you have really great tendies from the squeeze. But realistically, interest rates are a huge part of that as well, but you just need to make sure you're paying attention to that.
What else happens? I think it's very important for the stock market. So what happens is when interest rates go up that much, what happens is money flows out of the equity market and flows into the debt market, into bonds, T-bills, treasury notes, corporate bonds, commercial paper, all the things that give you a fixed income. Because at the end of the day, in the real world, what drives the market is return on investment, right? This is what it's really all about. People don't really understand this, and they should understand. This is the most fundamental thing. At the end of the day, what everyone is hoping that one day the company will be successful enough that it can pay a dividend on the shares, so I can just hold my shares and collect my dividend. Right. And that's like, that's a conservative, that's a value-based strategy, and that's called the yield. Right. So stocks companies that are successful will pay a dividend. So the stock has a yield. So even if you don't sell it, you still get income off the stock. Now that competes with bonds. So when you buy a bond, the bond might have a yield, a coupon of, let's say, 6% or 5%. So that means if you have, for $1 million, you're going to get back $50,000 a year in interest. Right. Well, guess what? In 1978, that you would get back 200,000.
Wow.
In interest. So what happens? So why would you invest $1 million in the stock market and take a risk when you could just put it to fix a bond is a guarantee?
Right.
It's a guarantee of a U.S. government bond, right? So if interest rates are 18 or 20%,
you can't.
Money flows out of the equity market into the bond market. So what's happening right now is interest rates are so low that there's no point to keep your money in the bank or in bonds because they don't pay anything. So everyone puts their money in the stock market. But what happens is if inflation starts to kick up, what does the Federal Reserve have to do? They have to start raising interest rates. As they raise interest rates, the fixed incomes all go up. And guess what happens? Money flows into that, big institutional money, because they're all looking for the return. So when the rates go up, money flows out of stocks into bonds. In the normal world that I grew up with, that everyone that really knows investing, there was this cycle of high interest rates and low interest rates. And when rates tick up, it's bad for the market. All of that ended in 1999 when George Bush refused to let that happen after 9/11 combined with the dot-com bubble. They flooded money. They kept interest rates low. They told Americans to go out and shop, and there became a disconnection in the normal economic cycle that we all learned about on Wall Street economics, and there was a disconnection there. So there's like this sort of that started a disconnection that's still going today, by the way, where we've been in a low interest rate environment for God knows how long. It's insane. So, but one day, imagine if inflation really starts to kick up, what would happen? The government's going to have to raise rates, but how do they service their debts? That's the quagmire. That's sort of the black swan of it. I think that everyone is most worried about what happens if inflation kicks up. That's the big deal.
So given the financial bubble and overextension of credit that's already been brought up, I think JB here is sharing a really, really solid investment strategy for a bear market or for a collapse. When he speaks of a disconnect that has happened in the market that hasn't been rectified yet, and he mentions that the national debt is the reason that hasn't happened yet, I can't help but think about the ties between BlackRock Financial and the White House. There's plenty of DD on Reddit that I've read discussing that potentially if the squeeze were high enough, the capital gains tax that would be collected would be enough to wipe out that national debt. So if that were to happen, then potentially the interest rates would be able to be put back into place to allow for a proper market correction. And thereby that would allow this strategy to be useful again.
Then ultimately in 72, Nixon took us off the gold standard. So every dollar was backed by gold in Fort Knox. And then they made this floating currencies that you say fiat currencies came into vogue, and the fiat currencies have advantages. They allow bankers to control things and manipulate things by using leverage and printing currency without any backing. And it's more based on the fact that the U.S. has got really cool aircraft carriers that can blow you up if you don't play by the rules. And at the end of the day, all money it's based on how many nuclear bombs we have and how many aircraft carriers that will send in our special forces and blow the fucking company. If you don't play by the rules of economics, we'll blow you up. That's what it's all based on. That's all the reason why the dollar has value. Is based on military power, the ability of the U.S. to project power, and it's always been like that. Rome was the same way. It's based on projection of power. There's like the stuff that's a real deep economic stuff, but it really is what drives everything.
So I just included this because I thought it was good information. A lot of new investors that may be new to the financial market may not know that. So I kind of just wanted to include that in this video. Technically, fiat is backed by nothing. And in my opinion, too much value is placed on it. I think that this will eventually correct, and I intend to be prepared for it by having a lot of investments outside of fiat currency.
There was another question that I wanted to bring up, and this was regards to sort of the biggest lessons that you've learned with all your years in the stock market. I think one of the best assets that you have as a person is your experience. You've seen a lot of things, you've done a lot of things. So through your experience in the stock market, being a broker, going through this whole process to get to where you are now, what advice would you give to people who are getting into the market right now? Because I think there are a lot of new investors with technology, being able to buy and sell in the blink of an eye on your phone. There's just a lot of new people out there who maybe don't know things they don't know. You don't know what questions to ask until you know what questions to ask.
My best advice I give to everyone is that if you want to play in the game of speculation, which is a really fun game and you can make a lot, right? You really just gotta be up on it. Like, you can't be a dabbler in this stuff. You gotta really pay attention. I talk a lot about fundamental value, but at the end of the day, it's like, if you're going to try, honestly, if you want to play the game of finding fundamentally sound companies, I would strongly advise you to just put all your money into spiders, into the EFTs, and buy the S&P. That's your best bet. Just buy it and hold it. You'll do much better just buying the S&P and holding it than trying to go find 10 stocks that are really great.
Right.
Okay. Biggest lesson, the biggest mistake I made at Stratton was in my hope of trying to appear legitimate, I tried to find companies that actually had a business versus companies that had no business at all, but just really crazily big, good ideas. It's those big ideas that actually are the ones that the stocks end up taking off.
Right.
It's not about earnings and assets. In the game that you're playing right now, a lot of people are investing in. It's not about earnings. It's just not about that. It's about what's got the exciting proposition, what's the latest thing. But you got to really stay up on that stuff. Like, you got to be really like, if you want to play it, you can't just be like, I heard a tip, and you're going to stay in the rooms, in the chat rooms, get into a network of people that know, and just really keep yourself abreast of this stuff. There's a lot of money to be made in the market in this sort of crazy story stocks that run up and then plummet back down. You can be on the right side without risking the farm every day, but you got to really stay up on it, and just remember that when the market becomes bearish, that game doesn't work anymore.
Right.
So again, here, I feel like JB is giving really solid advice. I, in no way, shape, or form feel that this is FUD. He says himself that there's a lot of money to be made in the market right now, and especially when there's a lot of excitement surrounding a stock, and we know that there's a lot of excitement here. But he also provides other options for people to invest in when the market turns bearish.
I think you're doing a great thing, buddy. I like what you're doing. You're giving people good information, so keep on doing it, and just remember, make as much as you can while the times are good, and then be more conservative when the times aren't good. And it's all cycles.
Right.
You're in a good cycle now. It's a good time to make money. So go for it.
It's a good time to make money on the stock market. That's obvious. But always protect yourself. And the best thing that you can do is to educate yourself and know what's going on in the market. You want to be able to understand so that as the cycle changes and we switch to a bearish market, you can alter your investment strategies accordingly, because there's a lot of room for losses. You want to know what's going on and make sure that you alter what you're doing. But in summary for this video, What I got from it was solid fundamental information and strategic investment information that can be used for new investors, especially people that are really new to the stock market and may not realize that the same rules don't apply anymore in a bearish market. So, I mean, it's really, really important for you to learn, you know, everything really as much as you can, because that's going to really help you do well. And I know a lot of people are calling the interview FUD, and even some are questioning Trey's motives for posting it, which I truly think is ridiculous. I think it's a shame. It's not what I get from the interview at all. And I think anybody who expected JB to go on the show and kind of do the whole like buy AMC thing is just, if you're disappointed, that's on you, because he has a very detailed history in the financial sector, and he's been in a lot of trouble. So he is always being watched. He can't go around doing things like that without getting into trouble. It doesn't even make any sense. But again, like I said, it could also have been a publicity stunt. We don't know that for sure. Realistically, your opinions on JB aside, he has a lot to share with the investment community given his experiences. But I do also think that the stock market has changed since his experiences. So I feel this information that he gives is useful, and it shared a lot that may help a lot of new investors. And I think Trey should be thanked for ponying up his own funds to put this together and allow it to happen, to allow some extra insight from an outside perspective for us. And I hope that him releasing this video will give retail investors some extra education and some strategic information into different strategies. And I believe that that was his intention, because like he says, he wants people to be educated. So in the end, I think the important thing to remember is that apes together are strong, and there's always money in the banana stand.